Hey, everybody, it's Nicole Benjamin, your host here at Seeking Alpha, to bring to you another episode of the Weekly Grade, where we're bringing to you market insights in minutes. Now, joining us for today's episode is VP of Quantitative Strategy here at Seeking Alpha, Stephen Cress himself. He is the wonderful person behind a lot of the amazing products you see here on site, our Alpha Picks portfolio, our Pro Quant portfolio, and our newest portfolio, the growth and income portfolio. So if any of those sound like something of interest to you, take a look and click the follow button on Steve's page. Now, Steve, thank you so much for joining us today.
It's great to be here. Thank you for organizing this.
Absolutely. Now, I want to jump right in. We are talking about all the AI productivity, and I see that the top companies are sending about $7,500 per employee per month on these AI tools that they're utilizing. So as phase one of the AI boom transitions from infrastructure into this enterprise adoption, how does Lockheed Martin leverage AI to enhance workforce productivity without simply replacing specialized staff?
Yeah, what I like about Lockheed Martin is the management team really brings front and center what they're doing within the firm. They have two major initiatives within the firm, and one focuses on coding and documentation. The other one, which they refer to as 1LMX, we think it's some military equipment, that helps to modernize their automation and digital engineering, which naturally increases productivity and reduces costs. So I think it's really cool about Lockheed Martin is they're not using their AI initiatives to reduce the labor force. They're using it to make it more efficient. And the revenue per employee at Lockheed Martin has really improved. And overall, we give them an A plus grade on profitability. But just to sort of use that revenue per employee figure, in 2023, it was $554,000 per person. And in 2025, it's increased to $610,000 per person. And the gains are climbing from there as these new AI platforms become more productive. So outside of the organic growth that they have from the geopolitical events that are occurring and depleted military inventories all over the world, you have a huge backlog. And on top of it, you have the company really increasing their productivity through AI.
All right. Well, I also want to talk about how Lockheed Martin has a strong buy on our site. And this rating is backed by a record $230 billion
Yeah.
backlog and this A plus profitability grade. So, how does its long duration defense contracts and these operational cash flows support both its dividend growth and valuation?
Well, what's, very fortunate for them is it looks like there is a long tail in terms of their backlog. So that, as you mentioned, and I had mentioned earlier, that backlog's at 230 billion. It's a record backlog for them, and they have had record revenue and record earnings. So they are not disappointing on that side. And when you increase the potential productivity through AI, that typically would mean that it frees up more cash. And that cash not only supports the current dividend structure that they have, it gives the potential for perhaps dividend increases in the future as well. And the current forward yield on it is about 2.45%. That dividend yield is significantly higher than the S&P, which is somewhere around the vicinity of just 1%. And it's even significantly higher than many income-oriented ETFs, such as the Vanguard High Yield Index ETF, which currently has a yield just north of about 2%. So this coming at 2.45% is substantially higher than a major benchmark like that and the S&P. But through that productivity, it's very promising that they could keep that dividend growth going forward.
All right. Well, jumping over, I'm going to speak to the portfolios we have on site, and specifically our newest portfolio, the Quant Growth and Income portfolio, is outperforming its benchmark by 9% since inception in June of this year. So, how does the quantitative model consistently screen for high yielding dividend stocks that still offer these strong capital appreciation?
Yeah, so we're looking for the combination of capital appreciation and income generation. We're not really chasing high yield. We want
Okay.
companies that provide a dividend, and we're looking to sort of target a yield range that's close to the benchmark. Fortunately, I'm happy to say that the yield for the quant growth and income is actually above the benchmark, which, as I mentioned, is the Vanguard High Yield Index ETF. And the average yield for QG&I right now is 2.75, compared with 2.21 for the benchmark. So I'm pleased that that's higher than that. Again, we try to keep it within a range. We're not necessarily going for high yields that are 8, 9, or 10%, because that often brings on high risk, and we don't want that. We're looking to invest in companies where they can maintain their dividend and they're not susceptible to a cut or reduction or suspending the dividend. So that's a key focus on our product, is investing in companies where there's a high probability that they'll maintain that dividend.
I want to wrap things up there, Steve. Thank you so much for joining us today. And for everybody that's listening in, if Lockheed Martin might be something you want for your portfolio, go ahead, read Steve's article. He dives way deeper into it there. And then also take a look into our quant growth and income portfolio. See if those dividend stocks might be something that's right for your portfolio. And we'll catch you here next time. Now, just for some housekeeping before we get out of here, past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed security dealer, broker, U.S. investment advisor, or investment bank. Thank you so much. We'll see you next time.